2 weeks after the completion of Brexit, an initial conclusion can be drawn for Germany as a financial centre. As a result of Great Britain's exit from the EU, according to the Federal Ministry of Finance, 55 banks and financial service providers in Germany tried to obtain a business license. 54 of the applications were approved. In addition to the financial institutions, 3 property and accident insurers also received business permits. This emerges from the answer to a small question from the Liberal Democrat member Frank Schäffler. The increase is remarkable. At the beginning of 2019, BaFin boss Felix Hufeld had spoken of 45 financial houses. In addition to credit institutions, this group also includes investment firms and other financial service providers. In November, the Bundesbank spoke of 40 credit institutions, investment firms and financial service providers who had received new licenses in Germany or expanded existing ones. The Brexit treaty has only recently come into force, but it has already had its first effects in the financial sector. For decades, London was seen as the hub for cross-border equity trading, says Dr. Volker Schmidt, Senior Portfolio Manager at Athenia Independent Investors. That seems to have been done with Brexit at the end of the transition phase. The Acquis Exchange, the second largest trading platform for European stocks in Great Britain, reported that 99.6% of all transactions were processed on its twin platform in Paris at the beginning of the year. The same was reported by Cboe Global Markets Incorporated, formerly Chicago Board Options Exchange, according to the expert. According to information provided by Cboe, around 90% of EU share trading was done in Amsterdam. In the previous year, almost the entire volume was settled in London. A total of around 6 billion euros were shifted from London to continental Europe on the first day of trading alone, said Schmidt. As a result, the British tax authorities will not only lose tax revenue, but it's also reasonable to assume that companies will in future prefer an IPO in the EU in order to benefit from smooth and active trading conditions. This shows drastically that London has already lost its status as a European financial centre. Schmidt estimates that this process will probably no longer be reversible. No tariffs on goods in bilateral trade between Great Britain and the EU. That was one of the main reasons for the Brexit agreement. However, a few weeks after Brexit, the problem became more and more apparent. On the one hand, small retailers and freight forwarders in particular complain about the increasing bureaucracy and the resulting paperwork, explains the Athenia expert. There are reports of traffic jams at the external borders, rejected trucks and collapsing supply chains. Many freight forwarders have suspended their deliveries for the time being. But even large corporations seem surprised by the uncertainties and are not sufficiently prepared. In order for goods to qualify for duty-free treatment, it must be proven that they originate in the EU or the UK, explains Schmidt. However, when importing through Great Britain and then exporting to the EU with little or no further processing, customs duties will apply. Marks & Spencer, for example, has its Percy Pig candy brand produced by Katjes in Germany, imports them to Great Britain and then distributes them to Ireland. From now on, there would be customs duties. In the future, companies will be faced with the choice of either paying the tariffs or rearranging their supply chains so that warehouses can be supplied directly without having to involve UK facilities. The latter will pose major challenges for small and medium-sized companies in particular, Schmidt is certain. On March 11th in 2019, the airlines Ryanair and Wizz Air announced that in the event of a Brexit, they would withdraw voting rights from their British shareholders. At the beginning of this year, we got serious and actually implemented it, said Schmidt. The background is the regulation according to which flights within the EU may only be operated by airlines that are majority owned by shareholders from the EU or at least under their influence. In the worst case, flight bans would be the consequence. Although Ryanair is based in Ireland, most of the shareholders, mainly institutional investors and funds, come from Great Britain. The same would apply to Wizz Air, based in Hungary, according to the Athenia expert. These are already the first effects and many will follow, some of them completely surprising. We therefore consider it useful to be flexible in all areas and to diversify in order to be prepared for further developments. And if you want to be informed on further developments, please subscribe to my channel and my other channels. I'll see you in my next video. Auf Wiedersehen.